Well, the manager of the world's biggest bond fund likes emerging markets. In his latest report, Pimco's Bill Gross says the sector offers growth prospects which are tilted upward. Gross favors debt and stocks of strong companies, but he warns that high-risk bonds, commercial real estate, and lower-quality municipal bonds may suffer. Morgan Stanley, meanwhile, says to avoid bonds of Swire Pacific, Vedanta Resources, and other companies affected by the slump in trade and manufacturing. Now, Swire owns 40% of Cathay Pacific Airways, and Vedanta mines for copper and zinc in India and Australia. Joining us for more is Nancy Ko. She is Director of Asian Corporate Research at BCP Securities, and she's live with us today from Singapore. Nancy, thanks so much for coming on the program. I want to ask you first about emerging market bonds, because those denominated in U.S. dollars and other foreign currencies, they've returned about 5% over the past year. So is there a case for buying emerging market or Asian corporates?
I think there are actually pockets of investment opportunities out there. I mean, notwithstanding that prices have actually rallied upward north, BCP still believes that we're still more defensive in terms of the defensive sectors that we like, and sticking with the better quality high-yield names. But certainly, I think in terms of the pockets of the high-yield, the quality high-yield space, I think that's definitely some opportunities there for investors who are hunting for yields.
I want to ask you how you see Asian corporate bonds performing compared to those from other emerging markets.
I think just looking at the default probability rate, certainly I think Asia has a lower rate of default probability as in compared to maybe like Eastern Europe. So I would believe that at least for in Asia, for some of the high yield credits, certainly I think in terms of the valuation and also in terms of the yield platform, that would actually make a more favorable comparison to say the Eastern Europe world.
And Bill Gross talking about high-risk debt. Obviously, it tends to offer higher yields. You see that suffering? How much interest right now is there in Asian high-yield bonds?
I think in comparison to the rest of the world, like in the U.S. or in Europe, the high-yield space in Asia actually tends to be much smaller. And, I think in terms of the supply, especially for the high-yield space, you could actually just count on a number of on your hands that have actually returned to the market, which is being Matahari and PLN. So I think in terms of the comparison, in terms of size, certainly Asian high-yield, market is definitely smaller. But having said that, I think in terms of comparison, there are some of the Asian high-yield spaces actually, attach promising yield returns.
We're going to be talking about some of those high-yield credits later, but generally speaking, what kind of returns can investors expect in the high-yield space as we look out over the next 6 to 12 months?
Well, I think, as you can see, I think in the last few months, since March this year, certainly investors have become less risk-averse, and you could actually see the yields tightening. But how we actually look at it is that we think a lot of the investors have actually priced in a lot of the potential upside, and actually all this valuation upside have actually kind of been priced in way, far away, kind of racing ahead of the fundamentals. I'll think that going forward, I think, in terms of yields, we could see it tightening maybe about 2 percentage points.
We spoke to Dan Fuss. He manages the Loomis Sales Bond Fund. We spoke to him back in June. His returns have matched Pimco's Bill Gross for the past decade. He favors local currency bonds. In just about 20 seconds, Nancy, are they the place to be right now?
I think for us, in terms of the local currency, thus far, we see a lot more in terms of the dollars. In terms of the local currency, the kind of trade flows that we've seen is basically more in terms of the converts, where it's mainly in renminbi or in rupee.
I got to interrupt you. We're going to continue our discussion after the break. Stay with us. And we're going to stick with Singapore and continue our discussion on these local currency bonds. We're with Nancy Ko from BCP Securities. And Nancy, before we went to break, we were talking about those local currency bonds. Bill Gross saying he favors, Dan Fuss from Loomis Sales saying he favors Thailand, Malaysia, Indonesia, Australia, New Zealand because they'll benefit from China's rise. Are you seeing a lot of interest in these local currency bonds that Trish was just talking about?
I guess for us at BCP, the platform more in terms is actually in terms of renminbi and rupee, because most of the local currency instruments that we are seeing traded from our side is mainly confined to convertible bonds. For the cash bonds thus far, I mean, we are seeing mainly in dollars, and I think it hasn't quite affected the appetite actually for dollar debt instruments. But coming back to the renminbi and the Indian rupee convertible bonds, I think as with the cash bonds, likewise the pricing and valuation of the CBs, whether it's in renminbi or in Indian rupees, have actually kind of crept northwards too. But still, I think there is in terms of some of the Chinese property CBs out there, there's kind of pockets of opportunity that's available too.
Nancy, let's switch gears and talk about individual corporate bonds now. And we're seeing quite a bit of bond offerings from companies. Last month, Korea National Oil Corp sold $1 billion of 5-year bonds, and another Korean company, Woori Bank, also tapped the markets with an $800 million issue. Hong Kong Mortgage Corp successfully sold $500 million worth of 5-year bonds. Which new offerings were the most attractively priced in your view?
I think in terms of the high-grade names, certainly, when you look at some of the Korean ones, certainly I think, some of them were actually saying that the recent Woori was actually attractive. But for us, I think it more in terms of the credit fundamentals. As you can see, that some of them actually, when they made their debuts in the secondary market, the yields have actually kind of tightened. I would actually put some of the better names like the KNOC and the Wooris.
Investors have been rushing into these bonds. They pushed down yields of Korean National Oil and Woori Bank by as much as 200 basis points. Do you see yields falling further?
I think certainly there will be some scale back. A lot of investors are there kind of just waiting around the corner to see that there might be some kind of corrections in the valuation and some of the yields tightening, etc. That certainly has signified that investors have become less risk adverse. But I think overall, over the next 6 months or so, we think that actually yields could actually kind of the spreads could actually widen. And as mentioned earlier, it could be like 2 percentage points.
Nancy, I want to cross to Indonesia now and talk about electricity company PLN. They recently sold $750 million of 10-year bonds. But yields, however, have gone up in the past week to just over 8%. They had been trading below 7.8% last week. Why is that?
I think more in terms of the fundamentals, because I would say that actually a lot of the tightening of yields and evaluation of such bonds, etc. I think investors have kind of got the notion that the economy is kind of improving, everybody's rushing in, and certainly I think they're demanding less in terms of the risk premium. But I think as days kind of they're looking at the economic statistics, etc., they feel that maybe perhaps they're factoring a little bit more rosy and a little bit racing more ahead to the fundamentals. So thus far, I think in the last few days, you could see some slight correction in terms of the valuation and the yields kind of tightening also.
Nancy, we've got about 30 seconds here, but more bond issues in the pipeline, including likelihood of more high-yield offerings, according to your reports. Just briefly, which one should investors keep their eye on?
I think in terms of high-yield credits returning to the Asia debt capital market, I think thus far you can only see Matahari and PLN, but I think going forward, I think for Asian high-yield space, it will be the better quality ones that's very likely to come to space after the Asian high-grade stuff. But I think for us, we still stick to more of defensive sectors. We like infrastructure and utilities, and also in terms of the natural coal, we saw natural commodities like the coal companies in Indonesia.
Nancy, all good recommendations. We thank you for joining us. Nancy Ko of BCP Securities today from Singapore.